I would say know your business very well and what it needs. Not every investor is going to give you what you need. So make sure you know your business really well and understand what your business actually needs. Know what your values are and make sure those values are aligned to the investor that you bring on board. Because a lot of impact investors want to be long-term partners. We at YSB prefer to be a long-term partner for the businesses that we invest in. So that means the values that you have must be aligned to the investor that you want. And then there are the common things. Get your business ready. Make sure your processes are in place. Make sure your documentation is in place. If possible, get a devil's advocate to ask you all those questions about the business that you don't want anybody to ask, because we will ask those questions and you need to think through them. Also, prepare your mindset. Raising capital sometimes can be a very long, drawn-out process, especially over the last 2-3 years. So prepare your business for if the money comes or if the money doesn't come. Prepare your business for if an investor says yes or if they say no. Prepare yourself for that. Also, be willing to ask the questions around why did you invest in me? If an investor comes on board, and if you have a decline, also ask why did you choose not to invest in me? Common mistakes that we see, integrity sometimes is a big issue. Just be honest with your investors, even about the things that go wrong, because we will find out at some point. So just be honest with us with regard to sometimes the reality of your business. And an investor will be able to tell you, I knew this before, so I will stick with you through if this cycle happens again, or I will help you through this down cycle that you're going through. So integrity is important of the entrepreneur, of the records that you give to your investors. That is a critical thing, and it's a deal breaker. For me, it is a deal breaker. I'd rather an entrepreneur comes and tells me, this is what I struggled with, this is how I need your help, or this is what we didn't get right and this is what we have learned from it, then somebody tells me the really nice school story and you find out that's not the really nice school story. So integrity is a big thing, and we've had to sometimes turn down investments for that reason. 2, know how to manage your business and know when to ask for help. I say that because sometimes an entrepreneur, a lot of these businesses, you come and you're not able to get the sufficient resources for your business. Other times we have entrepreneurs who just don't want help. So you can see they need the help and you're willing to give the help, but they're just not willing to take it. So also be open about the help that you need for your business. Number 3, think through what might go wrong in your business and how you have planned for those eventualities. We always plan for what goes right. We see it in the financial projections, but also plan for what goes wrong and plan to answer those questions when you're asked. If this doesn't happen, then what is the compensating mechanism, or what's the contingency that you have in plan to address this particular issue? So those are the things which, and if you have growth, how are you going to manage the growth? Managing 100 customers is very different from managing 1,000, 2,000. We know you want the thousands or the million customers, but go through the process of thinking through what does that take? Are you going to scale slowly or are you going to scale gradually? And what, in a sense, infrastructure or systems have you put in place to support that growth? That's what I would say entrepreneurs should think through over and above the normal things, your projections and those sort of things. There are other, can I say, non-financial aspects that you also need to think through as you go through a capital raising process.